as we progress throughout the chapters, we'll look at more categories of things similar to common stock, like preferred stock. We touched on that a little bit in 280. Additional paid-in capital, so another subsection of stock. Amount paid in over and above par. Dividends, we'll look at a whole bunch of different types of dividends besides cash dividends in later chapters. And revenues and expenses will be filtered throughout. So if you know the normal balances, then you can do the entry. So when you want to increase any of these, so if you want to increase assets, you do its normal balance, you debit it. If you want to increase the liability, you'll credit that. And then if you want to increase any of these, you would just do its normal balance. So if we just do a quick review, if you can go to your notes on page 39, let's do these 1 through 8 together. And let's think about what the journal entry would be for each of these. Okay, so the first one, if owners invest $40,000 in exchange for stock, what am I going to debit, what am I going to credit?
Debit cash, credit common stock.
Yep, absolutely. So I'm going to debit cash for $40,000 and I'm going to credit common stock. And if I think about this equation, it's going to balance out each and every one of these. This needs to stay in balance at all times, right? So I think about cash and common stock. So cash is going up, and so that means my assets will go up, right? And what's the offset to that?
Credit to equity.
Right, so equity is going up as well. And so I can see that, and you can list those arrows in that box too. So your assets are going up, your equity is going up, your equation is intact. Okay, so the next one, we disperse $600 cash. So it's a cash transaction for wages. So what's my debit and credit for that one?
Credit for cash.
Yep, absolutely. So you want to decrease cash, you want to credit cash.
It would be like a wage expense
Mhm.
credit.
Or do you mean debit?
Or
Yep.
wait. Yeah, debit, sorry.
Okay. So yeah, it could be salaries expense or wages expense, and as a debit. So you want to debit expenses and then credit cash. And then as a check, I'll look at my equation. So what's happening to assets, for example?
Going down.
Going down, right? Because cash is going up, and there must be an offset to that. So where's the offset?
Equity.
Equity. And equity is what's happening to equity.
It's going up.
So your expenses you have more expenses, right? So that's a draw out, right? So equity goes down. Yep, you want equity to go down. And that, you've got it, it's balanced.